Welcome to the Trader 24 Studios for your daily financial update on the global markets. Markets lie in wait for the signal from the two central banks on the short-term continuation as the interest rate war is well underway and the FOMC is meeting this otherwise difficult week. Meanwhile, the parade of corporate results in the US continues, with about one-third of those in the S&P 500 and announcing by Friday. Asian and European stock markets cannot get direction. The agricultural, commodities and precious metal market seems burdened in the shadow of an endless war and recessionary fears, and the US dollar remains at 20-year highs. The freight market is under pressure, having lost over 50% of its average value since the end of 2021, and the government bond market remains depressed, reflecting investment uncertainty. You're watching the Trader 24 Daily Global Market Overview. Let's take a closer look at the situation. On Wall Street, we have seen investors trying to find their tempo in a difficult landscape, with the key feature being the lack of medium-term direction. Volatility is likely to increase through Friday as we await new FOMC decisions on interest rate targeting and the Federal Reserve's balance sheet contraction on the one hand, and the macroeconomic data on quarter 2 GDP and corporate results for more than one-third of the large-cap S&P 500 on the other. The New York Stock Exchange Index closed positive 0.73% within the 14,000 to 15,000 range that has plagued it for the sixth week, with continuous alternating positive and negative sessions of moderate volume, backed by expectations for a modest easing of the Fed's aggressive moves in terms of interest rate targeting, with a scenario of another 100 basis points hike looking distant. On Friday, the key indices, S&P 500, Dow Jones and Nasdaq, closed with small gains being in positive territory for the most part, with a small cap followed with a 0.60% of Russell 2000. Most S&P sectors closed with gains except from telecoms, consumer discretionary and technology, with energy leading the charge at 3.71%. The VIX Risk Index gained 3.65%, setting the stage for a bigger move. The main positive protagonists in the large cap were Endo with a plus 11.41% and Southwestern with a plus 9.77%, while in technology the best performers were Pinduoduo with a plus 3.37% and Intuitive with a plus 3.46%. Finally, in the industrial Dow Jones, 20 out of 30 closed positive, with Chevron's plus 2.98% making the biggest impression. In the pre-market now, most listed companies are hovering around unchanged, with the Chicago futures giving a tepid, bearish opening. Asian markets closed with mixed signals. The Hang Seng outperformed with a plus 1.46% to a one-week high, with a domestic market boosted by a government announcement that is considering creating a 300 billion yuan or $45 billion real estate ETF to stimulate the burdened domestic sector. Moreover, Evergrande's plus 9% accelerated the good sentiment in the restructuring process of its high debt. Shanghai added 0.5%, Shenzhen added 1%, while Japan's Nikkei lagged with a loss of 0.16%, and the Australian 200 saw a month high with marginal gains of 0.10%. European markets closed with controlled gains. The DAX and CAC 40 saw a plus 0.30%, with the latter recording a 6-week high. The 600 Euro stocks closed at 0.13%, while the 50 Euro stocks closed at 0.21%. At the line of fire is the crucial Italian political issue opened by the resignation of Mario Draghi and the resulting uncertainty, for the moment, about the early formation of a government in the forthcoming elections. At the same time, the ECB has already joined the interest rate hike war, with for the first time in 11 years interest rate hike being a fact, thus directing the markets towards the financial sector, with a big loser initially being real estate. ING shares saw the biggest gains with a plus 2.50%, while Philips was jolted with a loss of 7.68%. For now, Euro markets have opened in negative territory, with pessimism winning over sentiment. In the Athenian Stock Exchange, Greece is unchanged in the general and 25 large-cap indices, with the banking sector at a plus 0.35%, while turnover remains extremely low for another session. In US Treasuries, there was investment interest with the Treasury bond markets on the one hand focusing on long maturities as a result of the expectation of a 75 basis points increase in the US benchmark rate, and on the other hand driving the 10-year yield well away from the local highs to 2.82%, the critical level as a 6-month low. The 30-year is in the 3% zone. The spread opened dangerously at 24 basis points in favor of the 2-year, and obviously the volatility in the coming days will be high. In Europe, the yield of the German bond was depressed to 0.99%, the spread of the Greek at 202 basis points, the Treasury at 178 basis points, and the gilt at 93 basis points. Still, air prevailed in the forex market as the mighty US dollar remained unchanged, with the dollar DX index standing around 106.5 points and the exchange rate with the euro in the region of 1.02. The problematic nature of the expected further Fed benchmark rate hike this week remains, with investors anticipating the 75 basis points at the same time as Australia and New Zealand are seeing aggressive shifts to their respective dollars due to a sharp rise in inflation rates there. The New Zealand dollar is at a one-month high of 0.6260 and the Australian dollar approached 0.70 per US dollar. The pound is again flirting with 1.20, while the yen remains at $136.6, slightly below recent multi-year highs. The Turkish lira continued to depreciate to 17.8 per dollar, a 7th-month low. Crude oil continued to hover below $100 and at 3-month lows, while Brent closed positive at $107 with fears that the Fed's monetary policy will strangle economic growth. Also, the problem of very expensive natural gas remains, with the European TTF showing about 188 euros per megawatt hour and Henry Hub near historic highs of around $8.90 per million thermal units. Silver remained neutral at $18.7 per ounce, a 2-year low, while gold held just above $1,720 on investment fears of poor macroeconomic developments in US GDP. In agricultural commodities, oats lost $4.35 per ton, approaching 12-month lows due to weather conditions in the US and Canada that led to forecasts of higher than expected supplies. Wheat reacted upwards at $7.80 per bushel, with the months showing a 14% loss, but the announcement by US officials that they will not impose sanctions of imports of seeds from Russia is a positive sign. Also crucial is the bilateral pact under discussion between the two warring countries to open the safe path through the Black Sea so that the transport of priority goods such as wheat can resume. Coffee Arabica retraced to the $2 per pound to 8-month lows, mainly due to the chain reaction of a strong US dollar and the depreciation of the Brazilian real, and despite the fact that Brazilian production forecasts are working in favor of a decent upward move towards 2.30. Inventories fell to a 23-year low, with the ICO reporting a shortfall of 3.13 million bags. Cocoa remained at its own 7th-month low, around $2,320 per ton, while sugar saw $17.6 per pound, a new 12-month low. Finally, in the freight market, the Baltics also closed negative 1.5% ahead of the risk of a serious recession in the coming period, and incidentally still continues to lose 50% of its price in just a few months. Individually, the Capesize lost 3.7% near 1-month lows, the Panamax saw a 2-week high at 2,100 points, and the Supramax took marginal gains of 0.9%. In terms of economic announcements, today we expect the Consumer Confidence Index in the US, where forecasts saw a decline for the 4th consecutive time, while on Wednesday, investors' eyes are on the announcement of the Federal Reserve Bank of the US on the new interest rate policy. In terms of corporate announcements, today we expect the financial results of Microsoft with projected earnings per share of $2.29 and revenue of $52.43 billion, Alphabet with projected earnings per share of $1.28 and revenue of $70.04 billion, and Visa with projected earnings per share of $1.74 and revenue of $7.06 billion. Yesterday, the financial results were announced by NXP with earnings per share of $3.52 and revenue of $3.31 billion, both above forecasts, and Newmont Goldcorp with earnings per share of $0.46 and revenue of $3.06 billion, both below forecasts. Yesterday's negative opening in the cryptocurrency market continues today with further declines in both the larger Bitcoin and Ethereum and altcoins. The Bitcoin continues its yesterday run below 22,000, having reached the 21,100 area, where it has been trading for the last few hours with a drop of 3.68%. Ethereum is also moving downwards, having lost almost 7% since yesterday, leaving behind last week's high of $1,600 and currently hovering around in the $1,400 region. It is worth noting, however, that Bitcoin and Ethereum have outperformed traditional markets by far this month. The top cryptocurrencies posted double-digit gains despite the strength of the dollar, diverging from the record move in the opposite direction of the dollar. Altcoins are also in the red, with Solana's Sol at $35.62 at minus 7.66%, Avalanche's AVAX at $20.60 with a minus 7.26%, Polygon's Matic at $0.75 with a minus 8.82%, Chainlink's Link at $6.31 with a minus 7.59%, and Polkadot's DOT at $6.66 with a minus 6.48%, recording the biggest losses. In other news, crypto trading platform FTX plans to offer early liquidity to customers of bankrupt crypto lender Voyager Digital. The proposal comes 2 weeks after Voyager filed for Chapter 11 bankruptcy. Thank you for joining us today. It was the Trader 24 Daily Global Market Overview. Stay tuned for our next comment on the financial markets.